Hello, and welcome back to another episode of the First Brick Property Buyers Agency podcast. My name is KM, and I'm the director of the First Brick Property Buyers Agency. Tongue twister, that one. The purpose of the podcast is to bring a casual style show to discuss all things property, with the education being the key. Our episodes will range from discussing a variety of topics to having special guests who can share insights into the property world. Whether you're a beginner or a seasoned investor, we believe this show will really be able to further your knowledge and really remove any barriers into getting involved in the exciting and fun world of property. Today, I have a very incredibly special guest with me. And if you're watching on YouTube, you can obviously see that there's someone next to me. If you're listening, let me describe my very special guest. She has a background in business, and she's a background in IT and business analyst background in IT. I can't speak today. So she hasn't always been in finance. Sneak peek of what she does at the moment. She's in finance. She's always loved property and is an investor herself. She runs a company called Sphinx Finance. Sphinx Finance provides a personalized service offering access to a range of lenders that suit your financial needs. And they offer competitive products and will always work in your best interest and not the banks. So we're kind of giving away what my special guest does today. She's a mother of two, as we said, a business owner. She's an educator. If you've gone onto her page, that we'll talk about it a little bit. You'll see there's a lot of education there. And she prides herself on making the impossible possible. So essentially, she is Superwoman, but also known as, to the layman, as Ezabella Ghaly. How are you? Welcome to the show.
Good. How are you?
Good.
Thanks for having me.
Did I do you justice with the intro?
I'm very humbled.
Yeah.
Thank you.
Obviously, for whatever reason, today, words are not coming out of my mouth freely. So I'm just going to let you do all the talking, and it'll probably be a better show like that. But how's your weekend? Good weekend? Busy, quiet?
Very boring. The weather and the rain.
It was a bit...
Yeah, lots of indoor family time.
Yeah. Too much?
It was okay. We just had to get creative.
Yeah, that's okay. Cool. Yeah. So obviously, you run your company called Sphinx Finance.
Yeah.
Before we get into today's show, you want to just, I've kind of alluded to what you do, but do you want to just let everyone know what Sphinx Finance is and what it's all about?
Yeah, so basically it's a company that provides financial services. At the moment, it's limited to loans, so any type of loans, whether residential, business, commercial, personal loans, any type of loans at all. Yeah. That's pretty much what we specialize in at the moment.
Beautiful. That's amazing. That's why we got you on today, because you kind of do everything. And we wanted to have a chat about some different things. But before we get into the crux of the show, I like to ask all my guests some questions, right? Just so we can get to know you, right? Some little fun questions. Firstly, if you could live anywhere in the world, anywhere at all, where would you live?
In all honesty,
and don't say Sydney.
This is going to be boring. I won't say Sydney, but Australia. Like, I won't move out of Australia. We live in a beautiful country.
Yeah.
So I'm happy to move anywhere around Australia, but I would never go anywhere else.
Yeah,
so.
That's fair. Yeah. I mean, it is a great country. I don't know if I would live anywhere else, to be honest, as well. Maybe I would like to live in Madrid, but it's because I like the soccer, and I would just my imagination, how I dream my life would be if I lived in Madrid is, I would just be at the soccer.
Everything revolves around soccer.
Yeah, there would be like no need to make money or anything like that. So probably a bit unrealistic. All right. What's your favorite thing about your career? I mean, it's a very challenging.
It is, yeah. But I guess one of the things that keep me going and motivate me is what you alluded to earlier, is making the impossible possible. Helping people, educating them on, everything to do with buying property and anything property related. So yeah.
Yeah. Okay.
That's my favorite.
Favorite food or cuisine?
Asian.
Asian.
Anything Asian. I was definitely born in the wrong culture.
Asian or
no, I will eat anything
Chinese,
Asian.
Vietnamese, Thai,
Love
Japanese.
Love
it's
it
all
all.
good.
Yep.
I do like Asian food. Actually, I had some sushi today.
Yeah.
And had sushi yesterday.
Yum.
I don't know what's going on. I'm in a sushi phase. Question without notice. Business analyst background in IT.
Yeah.
What was going on there?
So I love IT. I've always got an analytical mind. Mm-hmm. I've always been drawn to numbers, love numbers. And I love my career, but it just got to the point where I wanted to prioritize my family and being able to have time for yourself and a bit more control over your life. And so the more natural path was getting to anything property related, and this one seemed to fit, being, having to be analytical as well in the way that I help clients and putting proposals together for them and things like that.
So you wanted more control of your life. You wanted to spend more time with your family. So you started your own business.
I know it sounds a bit backwards, but it's working well so far. So
for sure. Well, that's good. That's good. All right. Well, let's get into the episode. So recently, Ezabella, I've been getting a lot of questions regarding alternate ways of lending. So I've been having a lot of customers come to me, and the situation isn't super straightforward. So different people, different circumstances, different financial situations, different goals. One way of lending doesn't always work.
No.
And you would know that more than anyone else.
Yep.
So I thought, let's talk about different ways of lending, right? You termed it nicely in a message, alternate lending or alternate finance, something like that.
Yeah, it's a term that a lot of lenders use themselves. So that's why it might be a bit more common.
No other lender has used it. We are trademarking it now. This is a Sphinx Finance term only.
Take that back.
Okay, well, you cannot be sued on this show. It's just general information. So I thought, let's talk about some different types of lending, the alternate lending that's available, the intricacies surrounding it. So sounds good?
Yeah,
let's get into it.
Yeah.
Cool. Before we get into the alternate ways of lending, if someone's listening to this, maybe they're new into the property world, they might say, well, what's the normal way of lending? Is there a normal way of lending, or something considered the normal way of lending?
Yeah. So a lot of brokers refer to this as being a vanilla deal.
Yeah.
Very vanilla. So which is the the usual way of lending is having genuine savings, money that you've had in your account for over a 3-month period.
Yeah.
A minimum of 5% of the actual purchase price. You've got a great credit history. You've never been late, never defaulted on anything, never been bankrupt. You're buying a house or a apartment that's not a tiny studio in a highly dense area, things like that. So anything like that is usually a vanilla deal.
Vanilla customer.
Yeah.
So they got all their ducks lined up.
Yes.
They're buying a run-of-the-mill property, nothing crazy about it, easy. Here's my pay slips.
Yeah. Got regular income coming in.
Yeah.
Nothing out of the ordinary.
So that's the vanilla deals. I assume, actually I don't know. Would you say that most of your customers are vanilla, or is it the complete opposite?
In my whole career, I think I've only gotten 2.
Okay. So we're going to go on and say 99% of people don't fall into that category. No. And I mean, I know, just thinking about what you're saying there, I probably wouldn't fit into that category, running a business, for example. Yeah. Most people, actually, vanilla for a reason. We should change the term to like white toast or something, like super bland. Okay, so let's get into the different types of lending. So we know what the orthodox, the vanilla lending is. Can you throw out a couple, what would be considered like different types of lending, alternate lending? Like,
yeah, so business owners who don't have all their documents is what you'd call low doc, which is low documents, literally.
Okay.
People who have had their business for under 2 years, their ABN's been registered for under 2 years.
Yeah.
Someone who's got a self-managed super fund, wanting to invest through that. People who've got credit impairment, you've been late a few times on your bills, you've been defaulted before, you've been bankrupt before, things like that,
So, okay, so that's like those commercials where you see, have you missed every single payment you've ever made on a credit card? Call us because we don't care, kind of thing. Get a new credit card. Okay. So that's your credit impairments. Low deposit loans, are they considered, I guess, a bit alternative or?
Not so much because, there's a lot of regular lenders that might do those now.
Okay.
It's not considered uncommon anymore.
Okay.
but it's still preferable, obviously, to always go through a broker because, you might go to your bank and they'll say, no, we don't do this and just decline.
Yeah.
So brokers would have a wider list of banks and that way, would give you a long list of lenders that would actually do that. But
Okay.
low deposit is not...
Not alternate.
No. Not so.
Okay.
Yeah.
Fair enough. Well, let's take a deep dive and unpack those ones that you just said because they're quite interesting.
Yeah.
I know you said so low deposit is not alternate. If we can touch on it really quickly then, because I think low deposit, a lot of people might fall into that category.
They do, yes.
So it might be beneficial talking about exactly what, I guess low deposit's in the name. You don't have enough of a deposit for the standard, I guess, is 20%. Is that the rule of thumb or not
20%
anymore?
a lot of the time it's very hard.
Yeah.
It's very hard to save 20%. Yeah. So anything under 20% is still doable.
Yeah.
With some restrictions, but it's doable.
Okay. So is under 20% considered low deposit or not anymore?
No.
What would you say is low deposit?
Under 5%.
Under 5%. Okay.
Yeah.
So if you've got under 5% deposit, what do you do?
There's a few options, and we're really, really digging here for these options.
Yeah, okay.
So one of the things that we might suggest is, can anyone gift you the remainder funds just to help you finalize the purchase?
Yeah. The bank of mum and dad.
Could be the bank of mum and dad. It could be the bank of brother, sister, uncle,
Someone else's bank.
Yeah, someone else's bank.
Yeah.
The other option is, which we try not to go down this path very much, this is going into desperate mode, is potentially getting a personal loan to cover the gap.
Yeah.
And the other one is, which not many people know about, is if you have assets that you can dispose of, and it might take a while to dispose. We're talking about 3 months, 6 months, even up to 12 months. You can always get a deposit bond to cover, just for now until you sell that asset and have those funds.
Okay, and just in as quickly as possible, I guess, could you explain what a deposit bond is?
Yeah, okay.
Yeah.
I'll do my best to be brief.
Yeah.
So
because I know it's not the easiest thing to say in a line.
That's okay. It's basically a piece of paper that someone gives on your behalf for an amount. It could be 5,000, 10,000, whatever. That piece of paper will have an expiry date on it. And usually you'll only be able to get it if you have an asset attached to it, because they'll know that once you get rid of that asset, you will have the funds.
Yeah.
There are fees associated with it, obviously, but, desperate times. So
desperate times, desperate measures.
Yeah.
Okay, so that's quite interesting. You mentioned low document. Low doc used to be really common, ages ago. It's not so much as common these days. I guess that's why it's an alternative way of lending. Yeah. Can you explain, maybe people haven't heard what's a low doc loan?
So the most common low doc scenarios I see are business owners who haven't done their most recent tax returns, which is what banks usually use to determine your income.
Yeah.
And so a lot of the time you don't have that many documents that they need. It could be 10 documents and you only have 2. And so that's where low doc comes in, is the bank might only ask for an accountant's letter, maybe a couple of bank statements or something. And that would fall into the low doc category. Okay.
So if you're a small business owner, under 2 years maybe, or is under 2 years separate?
Yeah, no, that's separate. But even someone who's been in business for under 2 years, maybe a year, but they just, for whatever reason, haven't gone to doing their tax returns, that's also common.
So when you're doing this low doc loan, I'm really intrigued on how it works. How does the bank, they're getting only a couple of documents and they're saying, all right, we'll give you a loan. That's pretty much it?
It is. The difference between that and a vanilla deal, what we're talking about, is with a vanilla deal, you only need a minimum of 5% deposit. And so the bank, obviously the risk isn't so much because they have all these documents to confirm your income. With low doc, they don't have that many documents, and so they want to lower their risk.
Yeah.
And the way they do that is you need to have a bigger deposit.
Okay.
So you generally need to stay out of LMI territory, which is lender's mortgage insurance.
Yep.
So under 80% LVR is what banks will generally lend for low doc.
Yeah. So you need at least a 20% deposit, like bare minimum.
Yes.
If you're going to go down that path. And is there any, I guess, interest rates higher generally in a low doc loan, or not really?
They are slightly higher, yeah.
Yeah. Okay.
Yeah.
So obviously, the less vanilla, the more the bank needs to take back somewhere else to cover
that's right.
the cost or the risk associated
exactly
with it.
Right.
Okay, so business owners, anyone else that usually uses low doc loans, or mainly them?
No,
Sole traders?
mainly, even sole traders.
Yeah.
It's mainly business owners.
Okay.
For that particular reason,
Yeah. Okay, cool. Guarantor loans, are they, because you mentioned gifts beforehand. Guarantor loans, I guess, would be alternative.
They are. They're very common with, someone who's in their 20s and haven't had enough time to save money or want to get into the property market quickly. And so they need, a bit of support. Yeah.
So again, what is a guarantor loan, or what's a guarantor?
So basically a guarantor loan is having someone else that owns a security, usually in the form of a house, a property. They basically guarantee the bank that here is another security, so that if this person ever defaults or anything like that, you not only have their security, but you've also got ours.
Yeah.
So guarantor loans can be very risky for the person who's actually going on as guarantor.
Yeah.
So I always advise everybody to make sure you get separate, independent financial advice before you do it.
Of course. Well, very good point. Anything on this podcast, as anyone who's ever listened knows, that this is just general advice. We're just having a chat. Sorry, not advice. This is just a chat. If you do want advice, go seek a professional. You come speak to Ezabella for her company directly. This is super broad. We're just talking really random here. Guarantor, can anyone be a guarantor for anyone? Could you be a guarantor for me? Could I be a guarantor for you? Or does it have to be like family? Or
yeah, it is restricted to immediate family members, usually parents.
Yeah.
Some banks may allow siblings or a partner, usually a husband or a wife, or if you're in a de facto.
Yeah.
But generally outside of family, it is it's almost impossible.
Yeah.
Yeah.
Does a guarantor loan affect the person that's the guarantor when they're if they're trying to get loans as well in the future, or not too much?
It can, depending on how much percentage of their house they've put up for the guarantor.
Okay.
Because if you think of a property as 100%, if they're going on a guarantor for their son, for example, which is 10% of their property.
Yeah.
Right. So they've got 90% to play with.
Yeah.
So that's pretty much how it works. It just works on the property being 100% as a whole.
Yeah.
So the more they lend out, I guess, the more percentage they lend out, the less they have themselves to play with.
Yeah. Okay. Fair enough. And guarantors, they can also guarantee for the stamp duty. Is that correct? Or
yes, they can. Yeah.
So in that case, it's like 105% or 104% loan or something like that.
So it's very common for someone who doesn't have the full amount deposit and the fees that come with it and things like that. And usually it is for first home buyers. So a lot of the time stamp duty doesn't actually come into play.
Yeah.
But if it does, you've got that option, yeah.
And with a guarantor loan, is there a point at which the guarantor is no longer a guarantor? So if the LVR gets to a certain point, the burden has eased?
Yes.
Is that how it works?
100%. So once the person has paid off at least 20% of their property, unfortunately the bank doesn't do this automatically. So you would need to request that the guarantor is released.
Yeah.
And that way they're no longer liable and their risk is reduced.
Okay, cool. So for all the young guns looking to buy a property that spent their early years traveling and partying and not saving, speak to your parents and get a guarantor loan, essentially.
Exactly.
Cool. You said you also mentioned SMSF.
Yes.
This is a big one, isn't it?
That's a very big one.
This is a big one. So
it's a very complicated, complex.
And there you go.
Yeah.
What is an SMSF?
So someone who has a lot of super Usually it's around 150,000 from what I've been told from accountants. You create a self-managed super fund where you have control over that money. And so legally, the laws allow you to invest with that money. And so as an option, you can buy property. And that way it's not your savings that you have to save. You can use that money to invest in property.
Okay. So so that's what an SMSF is.
Yeah.
How does it work? Exactly. I know you touched on it there, but
I'll go into detail.
Deep.
Yeah. Okay. Let's do it.
Unpack it. Let's get some gold.
So it's if you do decide to do it, I'll just give you a crackdown from the beginning.
Yeah.
Okay.
Let's do it.
You always have to make sure that you're doing regular deposits into your super.
Yeah.
There are any irregularities.
Yeah.
The bank will have lots of question marks and it might not go through.
Yeah.
So before you think about this, make sure that for at least 12 months you've got regular money going in and it shows in your account.
Okay.
For your super.
Yeah.
And once you decide to invest into property, you'd need to have a bigger deposit, unfortunately.
Okay.
So it's usually around minimum of 20%.
Yeah.
Depending on the bank, some will need 30.
Okay.
But yeah, so you need to have a bigger deposit. It's got to stay out of LMI territory, usually.
Yeah.
And there are higher fees up front, but obviously because it's an investment, some of these things are tax deductible, and it's best to talk to your accountant and financial planner together to make sure you're on the right path and best plan to do this, to tackle it.
Yeah.
And the purpose for self-managed super fund, if I haven't made it clear before, is that it is for investment property.
I was about to ask, can I buy my own home through a SMSF?
No, unfortunately, no.
Okay.
So it needs to be for investment, and it doesn't have to be a residential property. It can be a commercial property as well.
Okay.
It can be any form of property for investment purposes.
Could you buy land?
Yes, if it is
Investment.
income, if it generates income, yeah.
Okay, so if we just bought land and we didn't do anything with it, we just land banking, you wouldn't be able to. No income was coming through.
That's right.
Is there a rule around how you service in the loan through SMSF?
It's always around assets.
Yeah.
So you need to be asset rich to be able to do this.
Yeah.
Usually they'll have like a buffer, of 10% unsecured assets, or, depending on the bank, but usually it's around 10%.
Okay.
And just making sure that, you've got regular money going into your super to be able to fund the repayments and all that sort of stuff.
Yeah.
And the upfront fees and
Okay. So I've got 200 grand. I don't, but if I had 200 grand in my super, and then I wanted to buy an investment property, and we bought this property, do I have to? Is there any requirements around? Okay, the loan is going to cost X amount. Is there rules around how much? How I make the repayments? Is it?
So around the serviceability of the account, like if you can afford it.
Correct.
Yeah, it's very much the same as a residential. So it always goes back to the income that's going into the service managed super fund, plus all any liabilities that are in there, any expenses that are in there.
Yeah.
So all that gets taken into account.
Okay.
Yeah.
Do they take into account if I had 10 other investment properties, the rents coming from those properties is counted towards my serviceability as well?
Yes, unfortunately. Again, look, it generally speaking, it does, it does they do take it into account. However, some banks do it differently. So some banks might utilize 100% of that rental income. Some banks might utilize 80% of that rental income. So again, that's why it's always best to go through a broker, because they would know these little tiny details that would help get your loan across the line.
Yeah.
Whereas if you go to your bank, it might be one of the ones that will only take a shorter amount of that rental income, a shorter percentage of it, and then it might not service. And so that's one of the other things you've got to take into consideration.
Okay. I thought it was a lot more complicated than that. You've made it sound like such an easy process. So you purchase through your super, your payments, it's all doing good. Can you buy more than one in your super?
Yeah, if you can afford
limit?
it.
Yeah.
No, it all goes back to your affordability. So if all the numbers stack up and you can afford the repayments, then absolutely.
Okay.
Yeah.
So the requirements are almost the same as a normal vanilla loan in terms of you have to have the deposit, you got to have the serviceability.
Yeah, it's just a little bit tighter, and sometimes there are, actually not sometimes, a lot of the times there are more documents required
Okay.
to prove all of this.
Yeah.
So that's the other downside of SMSF.
Okay. Fair enough. I had a question and it's gone. I've lost.
Come back to it.
If I remember it, we'll come back to it. Credit impairments, something you mentioned. People with bad credit and whatnot. Again, what does what does bad credit mean? What does bad credit mean? What is that?
Yeah.
I've never had a credit card before. Can I have bad credit?
No.
No.
It's got nothing to do with how many credit facilities you have on your credit file.
Yeah.
It's purely on the conduct of your financial decisions.
Yeah.
So a lot of the common ones that I would see are, someone who's made late payments, and what a bank considers a late payment is anything more than 2 weeks old. So if your bill has lapsed 2 weeks, then there'll be a mark on your credit file for that month.
Yeah.
And so these are things you've got to look out for. So besides being late, someone who's defaulted, so you owe money, you never paid it, and they've followed you up and gone through all the process of trying to recover and weren't successful, then they would put a default on your credit file.
Yeah.
Or if you've been bankrupt,
Okay.
that will also have a huge impact on your credit file.
Yeah.
And obviously all these things decrease your score as well.
Okay. So there is actually a score.
Yes.
Do you gain points, or do you start somewhere and lose points? Or how does it work?
No, usually you start somewhere mid-low.
Okay.
And then as your credit file gets older and your conduct is quite good and there's nothing poor on there, then your credit score increases.
Yeah.
And you've got to be careful because some banks, depending on what your credit score is, if it's below a certain number, it automatically gets declined before it even goes to a person to look at it.
Okay.
So, yeah.
So if someone has not had any liabilities, debts, loans, credit card, nothing, does the bank look at it different? Is it just you've had nothing in the past? How does it work?
So some banks would prefer to see a credit file that's at least 12 months old.
Yeah.
So if you're 18, for example, one of the easiest things you can do is get a phone under your name. Okay. Any type of credit facility, anything.
So even a mobile phone plan?
Yeah, a mobile phone plan. Okay. Any account with anyone that requires you to pay them will create a credit file for you. Okay, so
any form of regular payments?
Yes.
Okay, so everyone's got a credit score somehow, somewhere,
Unless you're fresh out of school and you've never had your name on anything.
Yeah, fair enough. Or you just, you backpacker chilling.
Yeah.
So these people that have bad credit scores due to whatever reason in their life, that they and you said that if they get so bad, banks just automatically, decline. What can these people do? Can they still get loans? Is there ways around it?
100%. I always say never. Don't ever say never.
And making the impossible possible.
Exactly. That's what your broker does.
Yeah.
That's what they're there for. Your broker knows exactly which banks will accept what, and they will always get you the best deal. Which is why we know that some of the banks would, if you go through them, it'll just be an automatic decline.
Yeah.
So what's the point of So we would always direct you to ones that don't. Obviously, sometimes the interest rate might be slightly higher. Sometimes the fees might be higher, things like that. But if it gets you into the property market, it might be worth doing that for 12 months until you clean up your credit, and then you can go on to a much more competitive rate.
Yeah. Okay, so sometimes the banks or some lenders will allow it, they might charge you more. They might need more of a deposit. Again, mitigating their own risk.
Yes.
But not saying no completely.
No, not saying no.
Yeah.
And the other option is for someone who has, a poor credit file, is if you don't want to pay, that higher rate or anything, you can always get your credit file cleaned up.
Yeah.
So you go to a credit impairment, I can't remember the name now.
As well. Yeah.
Gone blank.
Credit cleanup person.
Yeah, let's call them a credit cleanup person.
Yeah.
So, it's a company that basically, for a fee, of course, they will get rid of some of the defaults on there.
Okay. Legally?
Oh, 100%.
Yeah, okay.
So one of the very interesting facts that I found out recently is, because I had to do this for a client, defaults are actually quite easy to remove. Okay. They're one of the easiest things to remove from a file. And the reason for that is there are a lot of legalities around putting it on there in the first place.
Yeah.
There are so many things that a company has to do before putting that default on there. And a lot of the times they don't. So even if they miss one tiny step, the company can, request for it to be overturned, and it'll be removed from your file, and an instant credit score rise.
That's amazing. I didn't know that actually ever existed, not legally anyway. Okay, fair enough. Okay, so we've gone through a few different ways of alternate lending, different scenarios. Was there any other ones that you had on your mind that you want to go through, or have we covered them all? Or the main
I can't
ones?
think of anything else.
I think we've done a good job. You've done a good job. I just berated you with questions. Okay, yeah, they're pretty common ones. I as you were talking about them, I could think of people that fit into every single category. We know a lot of business owners. We know a lot of first-time people that have no deposits, so they might be looking at guarantors. We've done a few purchased a few properties for people with guarantors in the past. SMSF. We get asked a lot about SMSF. We might have to do like a whole episode on SMSF and just like really do some case scenarios. I don't know. We might have to bring you back for version 2.
I'd love to, yeah.
Yeah, thank you. I think this was a really, really cool episode. Yeah, making the impossible possible. I might call it that, if you allow me. I don't know. I'll think about it.
You're welcome to it.
Well, there you have it, folks. Thanks for listening, everyone. Hopefully this episode has shed some light into the alternate ways of lending. It really has for me. Like I said, I can think of so many people that would fall under those categories. And last week, I don't know what happened in these last 2 weeks, but so many people have called and said, I've got this situation, the banks won't give me the money, or the banks won't do this. And anyone that listens to this podcast knows I'm a huge advocate of using smart mortgage brokers, not just any mortgage broker. They got to be smart. They got to know what they're doing. They got to have their investment hats on a lot of the time, or investor hats on, and work around to figure out the situation. The banks will simply not do that. So you got to speak to your smart brokers, because, well, they're smart and they're going to figure it out, and they make the impossible possible. So if you're thinking maybe you may not be eligible to get a loan the traditional way, you still may be eligible. And there may be hope. It's about, if someone's in that situation, how can they reach you? How can they find you?
Yeah.
Tell them where to go.
Very easy. The best way to contact us is through Facebook. And basically it's just a page called Sphinx Finance.
Sphinx as in Egypt. Sphinx.
As in, the old, thousands-year-old,
okay, cool.
Traditional Sphinx.
Yeah.
We're also on Instagram, so it's Sphinx_finance.
And Facebook's just Sphinx Finance.
Yeah.
Yeah. Email or anything like that? Is it on the pages? They'll find it.
Everything, all the details are on the pages. Even my direct contact number as well.
Yeah.
So, yeah.
Cool. We will link all your stuff in our show notes, put on the post. So if anyone is trying to find her or Sphinx Finance, that's how you find it. And if you can't find it, get in contact with us and we'll send you over to Ezabella. So yeah, and you can find all of our content, of course, on all of our socials. We're on Facebook, Instagram, YouTube, LinkedIn, everywhere. We are always doing something. We're always trying to educate, free education, giving back. And if you have any topics you would like discussed, just like this one today, this is purely based off user reviews, I guess, send us a message. at hello@firstbrick.com.au, or shoot us a message on our social platforms. And if you enjoyed today's episode, please leave a review, subscribe if you're listening to YouTube, whatever it is. Find us, click like, review, 5 stars, comment, let us know what you think. Right, Ezabella was the best guest you've ever had. Have her on more often, kick KM off as host, make her host, whatever you want to write, put it in there so we know about it. And as always, pass the pod. If you know anyone you think would enjoy this podcast, please let them know. It really does help us to see the views going up and up. It keeps us going. It's amazing to see how many people listen to this, and hopefully we're changing people's lives, or maybe not lives, just changing their mindsets and stuff like that. So pass the pod. Buying property is our passion. Helping you do it is our mission. Thanks, Ezabella.
Thank you.